All right, everybody, welcome here to the live stream. I have Mike with me, Jake with me, head of acquisitions, and we're going to go over a bunch of different things. And we'll start with, let's see if I can share the screen and find his presentation. Oh, here we go. Tell me if you guys see this.
Yep. Yeah, I can see it.
Beautiful. All right, let's get into, can you see the foreclosure starts by quarter?
Yep.
All right. So you could see, obviously, 2020, when COVID hit, it just stopped because they put the moratorium on it. And ever since we came out at the end of 2021, we increased really dramatically just because foreclosures were so backed up. Then we actually dropped for a little bit, went back up. We've been going like kind of in a sawtooth pattern here, but easing our way back up, but nothing crazy. But it is still heading upward. And then when you look at, this is a really important map for us to look at right now, because this tells us the future, 6 to 12 months down the road. The March 2024 foreclosure starts by Metro, and you can see where the hot pockets are. Real red ones are real hot up here in Florida, Cape Coral, and South Florida, Southwest Florida, parts of Texas, California, Arizona. Where else the hot spots? That's pretty much it. Those are the big hot spots right now. And that'll tell us where to look for the future. But we'll get into some other data here where he talks about there's 30-day lates and 90-day delinquencies. We'll talk a little bit about that. Okay, so completed foreclosure auctions. What do we got? 49%, 38% for first quarter of 2020. Okay.
Oh, it's comparing in pre-COVID quarter, basically.
Yeah.
Where we at today. Obviously, like a third, or a little more than a third of where we're at 38%.
Yep.
Back then. Which makes sense, Paul, right? Given the activity we've seen. And
absolutely. Yeah, with what we're seeing, I mean, it just matches, goes hand in hand with the numbers here in the starts. And then if you go to foreclosure action volume by state, Florida is actually really low when you look at it by state, but Louisiana is really high. Oklahoma is really high. Colorado is really high. Nevada, look at Alaska, Pennsylvania.
Yeah.
So foreclosure auction volume by state.
Oh, so it's comparing to, again, right before COVID, what the level is. So going to Oklahoma, foreclosures, auction volume in Oklahoma are 110% higher than they were
the first quarter of 2020.
They're like over double. That's interesting. Okay.
Yeah.
Well, I think it makes sense. I mean, we've seen a lot that have come on the market in those areas too. You know,
Louisiana definitely makes sense. We've gotten a bunch of wins in Louisiana this past, call it 12 months even. So that's that one doesn't surprise me at all.
No, Louisiana, West Virginia, Kentucky. Look at that, Indiana, high up there, and the Dakotas. But if you look at those states that have the higher, look at Florida's really low. And at first you would think, why is it so low? And well, think about it. It's had the biggest price increase of anybody. So they're not in danger of foreclosure when they can still sell the property for more than what they owe on it.
Yeah.
So those states that went up the most, Arizona, Florida, even Georgia went up pretty good too. You can see they're all low. Georgia's also more affordable, so you're less risk of foreclosure. It's pretty interesting that is pretty. New Jersey is low, and that's because there's just no inventory in New Jersey right now either. Some interesting numbers here. All right, now here's the 30-day delinquent, which are up here in the fourth quarter. 2023 is the last data they have compared to the fourth quarter of 2019. So they are up, the 30-day delinquencies. But if you go the 90-day, they're actually down. And the reason, and talking with Daren about this, there are so many states, the funding from the first COVID bill that came out, which helps homeowners, is out there and being used, which is why the 90-day delinquency is lower than a 30-day. Because once they get 30 days delinquent, they can now apply for the assistance. The assistance comes in and knocks the numbers down, which is why you're not getting that 90-day increase, which is very interesting. All right, what's the next one here? This, what percentage of your organization's loans and loss mitigation do you expect will permanently perform? This is for lenders. Okay. This is mortgage companies out there. The ones that are in the program for loan loss mitigation, they think only 51% are going to perform. That is incredibly low.
Yeah, I mean, it's a coin toss.
Yes, 50-50.
I mean, it's a 50-50. So you're going to do some loss mitigation knowing one of two people is going to succeed, the other person's not.
And there's a lot of factors, Daren said, that they came in with this. Factors looking forward of unemployment and inflation, these things affecting these people long term, which is why it's so low. Normally, this is well up around 78, 79%. So you can see this is incredibly low just because where they see the future going and with what's going on now. And here's the homeowner assistance funds. Here's the percentage that have been used. So you see Florida, like 97% has been used. Texas, 94%, whereas only 61% in PA, only 47% in Georgia. You see the states that still have low use, even Idaho, right? Yeah. Low use of it. So there's still funding available there, but a lot of these states have dried up everything. Louisiana, 99% of it is gone. Texas, and 103%. They overused in Arizona.
So the closer you are to the 100 as a state, the more likely then going forward,
you're in trouble.
You're going to see more of those people that already hit 30 also hit 90-day delinquent. Yes. Yeah. And they'll continue through that funnel into the sheriff's sale and then ultimately into like an REO bucket.
Yep. So the defaults will increase in these states first is what we got to look at, right? These are states, all right, look at probably a year down the road, maybe a year and a half, depending on how long it takes to foreclose in these different states. But we can target it. And obviously Florida is going to have a target on it. Texas, Louisiana, even Alabama.
Because other states we're already targeting too.
Agreed. Yep. Very interesting.
And why do you think it is those states are seeing a higher uptick?
So these are where the governors were very proactive. Like DeSantis was right out with the homeowner assistance right away. Abbott was out on it right away. And Arizona governor obviously was too. The states that weren't as proactive, or didn't have as much need, combination.
Is a combination.
A lot of it people don't know, right? A lot of people don't know that this is out there unless they get information from local government, the state government. And I guess the ones that don't have as much either don't push it as much or don't have as much of a need. This is pre-foreclosure sales. This one I really, really liked. If you look at this, so the yellow is the pre-foreclosures, right? When you look at those, I used to do door knocking a pre-foreclosure before they went in there. And you can see how low these numbers typically are. Then when we hit the low of the real estate market in 2013, started going up, these started ticking upward. So these are the amount of sales before it gets to foreclosure. And when there's no inventory, look at this skyrocket in 21, 22 when the market took off post-COVID, and then come back down a little bit in 2023. So the number of deals being bought pre-foreclosure has risen dramatically, but there's a lot of factors as to why.
Yeah.
Daren didn't quite understand this first one because he doesn't understand the subject to opportunity, picking up a property subject to keeping the existing mortgage in place, which is 3% or 4%, really cheap rates. People don't mind doing that. That's what was going on there. Or people have a lot of equity. They're able to sell their property to an investor before it goes to foreclosure, right? Because
that's a great example, right? You bought a house in 17 and then you had troubles. Let's just go to 22, right? Where it's 65%. Yeah. Your house value might increase depending on where you're at in the country, 40%.
Yep.
And you know what I mean? So now that investor or other person buying your property, given the houses rose so much, can afford to pay you at least what you're here, got it under mortgage for. And that's why you're probably seeing the sales of pre-foreclosure sales skyrocketed the last few years because of given that equity increase.
Yep.
And then especially if you have that cheap 2%, 3% mortgage, the subject to thing you just talked about.
Yeah.
Which is probably why you're seeing it slowly creep up too, and not like big astronomical jumps or anything like that, because people have so much equity in their place.
They do. Yeah. People have equity and flexibility with that. Now the number's coming down a bit here in 2023. I expect it'll be down even a little bit further here in 2024. Part of it is because of investor sentiment. And investors had pulled back a bit in 2023 at different times, at least early in the year. So that could be a part of it too. Or people are just undecided now with rates so high, they don't know what to do, and they're just hanging on too. We'll see where that leads us to. And here we're just talking about the equity, right? Look at the amount of equity in real estate that these people have. Tappable equity is this amount, because typically you can get 75 to 80% of your equity here.
Yep.
And this is the untapped amount, which is growing. It was already growing here, but now it's really growing. So that gives sellers flexibility, which is why you haven't seen any big increase of inventory and or big increase price drops. All right. I forget what this
Does he think that we'll see some like reverse mortgages or anything like that? Because
there's been a big uptick in reverse mortgages. Yeah. There's been a big uptick and those are the dangerous mortgages that you don't like seeing people have, because that means people don't have any of their IRA money anymore or 401k. Mm-hmm. They're running out of retirement money. So now they got to tap it from their equity in their house. Yeah. And that happens to a lot of seniors, and you hate to see that. But hey, inflation's doing it. It's eating them up. I can't remember if we didn't really touch on this one too much, but let's look at it. The foreclosure spin cycle and impact on equity, after repair equity, after repair value, and total debt. What is this saying here? I guess it's decreasing.
So it's basically the chart on the left. It looks like the green bar is how long you're in that foreclosure cycle, right? From default until, is it sheriff's sale? I don't know.
Sale, yeah. Sheriff's sale or courthouse. Yep.
Yeah. It's getting long. It's over a year now.
Yeah. It's getting really long.
479 there. It's a well over. Before it was half year, just a few years ago at 188 days.
Yeah. I guess it's all these programs they have out there, right, that can extend this.
Yep. Yeah. It's going back to the slides we had a few slides ago, the loss mitigation programs that we talked about.
Yep. Yes, that makes sense.
Yeah, that kind of makes sense, because if you see like the places that we target, the ones that are in foreclosure, I mean, the process.
They've been vacant for 2 years sometimes, right? Yeah. Because of this. And that lines up with that chart we just had.
And some of them have been vacant for 2 years or plus.
True. Yep. Now, this chart is super telling on consumer sentiment. So given 100 points of risk, how much would you assign to each of the following in terms of risk higher delinquencies between now and the end of 2024? So the number one thing people put on this shocked Daren was rising insurance and property taxes. And that makes a ton of sense, right? Because the insurance rates have doubled, tripled in areas, and the property taxes have been jacked up all over the place too. So 37% of the people are worried about that. That's their number one concern. And then consumer debt and delinquencies is number 2. Rising unemployment, 3. Commercial mortgage defaults, 4. And falling home prices, only 6%. People feel that their prices aren't going to fall.
It doesn't surprise me, given our previous conversations, right? That people focus on the monthly payment, the money in and out every month.
Yep.
The insurance and property taxes, especially if you escrow, hit it immediately and you feel it in the pocketbook.
It's the first thing.
Yeah.
I mean, just getting phone calls and texts from people all the time, like, oh my gosh, property and casualty for car and home are just been, I mean, you see it in your own state, Paul, what they probably 3X'd over since you moved down there.
Yep. 3X'd. Yeah. Big time. And our property taxes were increased dramatically too, which sucks. It's par for the course, but all right. What do we got here? This is, again, I think, going to mortgage companies. How do you expect your organization's completed foreclosure volumes to trend between now and the end of 2024? So they don't see a big 5 to 9% increase. Okay, here we go. Fannie and Freddie, HUD.
Okay.
VA. So I'm looking at some of the things here. Non-disclosure.
Are you able to do full screen on this one?
Yeah, let's see if I can.
Yeah, that way for the folks watching, it's probably easier.
Can you see that any better?
That's a lot better. Yeah.
Okay. All right. Yeah. So this.
All right, so most people, whether you're a government agency or whatever, you think foreclosures are going to trend in that what we've been seeing, the 1 to 4%, basically.
That's right. Which is kind of your normal. It's pretty much.
Yeah, I mean, you read the monthly Adam data report on foreclosure activity. It's like month over month increase 1%.
Yep. So that's not too bad. You look at that there. I mean, it's your typical standard thing here. Okay, here's the winning bid to after repair value in the green line. And
So
a
this
retail
is
home price.
auction.com's definition of after repair value versus what someone wanted at.
Yeah. So if you look at the green line compared to the actual retail, which is the blue line, investors follow this really well. So investors are ahead of the curve. See how quickly they dropped off here and how this number, this went down a little bit later. Then they were early coming up before this came back up.
Yeah.
Investors are always ahead of the curve if you kind of look at things. This was probably an unexpected one here. But yeah, COVID. Investors did not expect it to shoot up, remember? And we were all talking about this. Nobody saw this coming right after COVID happened, the skyrocketing housing value. So that's interesting. But investors, again, saw it as the prices were starting to not necessarily decline. What do you call it? The bid. So this is their bids, right? The winning bid. They're going downward here. They actually went downward further in advance. The investors did than what actually happened. So see how far ahead we are as investors.
Yep.
Pretty interesting. But this didn't follow exactly as they wanted to. So now you're seeing it come back. This is dropping down again. Retail. Yeah, the appreciation obviously is dropping down a little bit here, but people are bidding a little bit higher. Slightly. It's flattening out again. It's an interesting one. It shows follow investors. They're usually going to be right. And this is another, it's a foreclosure auction pricing by Metro. All right, I'm going to
actually go back to that one, Paul. Is that, what is that again? It's what, so
We
what
did
the
this.
properties are selling for on auction? Like, so a dark green means like the increase in value a lot, like the price in auction. Is that what this one is?
It looks to be.
Okay.
Looks to be. It's really hard to read this one on this thing.
Yeah.
But yeah. Well, Cape Coral, that's actually the bright red spot right here in Florida. That is metro area where the prices, I think it's where they're falling, right? The prices are falling.
Well, the red's falling. Yeah.
Yeah,
Green
that
is, I
makes
think,
sense.
increasing.
Green is going up. So certain spots in the East Coast going up, but Cape Coral, red dot, Jacksonville is a red dot, Louisiana, which we're seeing and parts of Alabama, parts of Texas, Louisiana, Mississippi, that whole area.
Yeah, we've looked at a few places recently in those areas, and the prices have been falling too.
Denver here in Colorado.
Yeah.
So yeah, we're seeing and odd places. This must be in Minnesota, Minneapolis, and
Yeah.
because we're seeing mostly from the Midwest, we're seeing good stuff. You know, we're seeing good data there. All right, I'm going to remove those. We'll just talk about that, but it's kind of following with what we've been bidding on and what we've been getting too. You know, we've done well in Michigan. We've done well. I mean, we've got one in Louisiana. It's hopefully going to be closing here shortly. The one in, was it Baker?
Yeah, Baker.
Yeah.
I think towards the end of the month.
Yeah, like the 23rd or so, I believe.
Yeah.
Or 26, somewhere in that range. But yeah, we're seeing this kind of trends exactly with what we've been seeing and where we've been winning properties. We did just win one in Colorado yesterday.
Yep.
What other areas have we recently gotten properties in?
Colorado this week. Last week was Indiana. Week before was Wisconsin. Week before that was Texas. 2 weeks before that was Missouri.
Missouri.
Yeah.
So they were saying the Midwest is showing good strength in this, and the Northeast. If you look at another article I was reading, the Northeast and the Midwest are the ones getting the best appreciation right now. And partly because there's not a ton of inventory in those markets.
Yep.
Or mostly. But even the ones we're getting in Louisiana, the southern Louisiana is what's getting hit. And we're more central and northern Louisiana, the ones we've been getting. And there's less inventory there.
Yeah.
But at Birmingham, I know, is getting hit, in Alabama. But different and Huntsville, the big ones that boomed, they're getting hit a little bit now too.
Yeah, I mean, our agent in Alabama had told us to kind of stay clear of parts of Birmingham.
Yeah. And Texas, depending on where you are, there's hot markets, and then where it's too much inventory. Other markets where there's too much inventory. I think the new one we're getting is what, about 35 minutes or 45 minutes northwest of Dallas, right? I think that's the one we're closing on next week, as a matter of fact.
Yeah, the Hubzoo one, right?
Yeah, there's not too much inventory up there in those markets. And so we're concentrating on those. We'll just keep concentrating on the ones that don't have a ton of inventory. They'll move a little bit quicker. Our one in West Virginia, we're going to be relisting and putting that one back on here after this. I think it's on next week to have that meeting. But not a ton of inventory there either. So I think focusing on these markets where there's just no inventory is still the play. And
yeah, they said prices have kind of just stayed the same there, which is good for us too.
Yep. Meanwhile, Cape Coral is still dropping, and I'm seeing more there. So still a little bit.
I was just on the MLS the other day, and stuff's coming back. Well, you get notified, hey, price change, like 50K now, price drops, like on a 500K ask, like, so that's 10%.
Huge.
Like that. Yeah. Something you haven't seen in a while, right? So yeah, obviously you got to watch that falling knife, as you term use a lot, Paul. So it's something to keep an eye on that market.
Definitely.
Yeah, unfortunately, parts of Alabama too, like Cusada, it's kind of falling too.
Yeah. That's
the
one
big thing there is affordability too.
Yeah.
With rates and things like that, insurance.
Yeah. The insurance rates definitely were hit in Alabama as well. They were hit a bit like Florida. Because Alabama gets all those tropical storms too, and those hurricanes and remnants of them, and Georgia and Mississippi and Louisiana. They're all right in that.
It's all the Gulf state stuff. Yeah.
Yeah. Now they're talking about record or, a ton of hurricanes here. And I just picked up another article about being a bunch of hurricanes, which means there's not going to be any. This happened a couple of years ago where they said there's going to be all these hurricanes and nothing happened. So whenever they say, and this has just been something I've researched, whenever they say there's going to be a ton, there ends up being none. Whenever they don't talk about it, there ends up being a lot. So that means there's probably going to be none. I was listening to weatherbell.com. He doesn't feel there's going to be a ton of activity right now. Anyway, so we'll see what happens. I'm knocking wood when I say that.
yeah. You don't want, no one wants that deal with that damage, right? So,
no. And that's just another reason for them to jack up more insurance rates that we don't need. That's for sure. All right. What else do we want to pivot to? I'm trying to remember what else we had talked about besides the new ones. New markets there's really no new states that we're getting now that we haven't gotten before, right?
Colorado, if you would call that one.
Colorado
it's not like a freaking flyer of ours, just given the demand for that state. But
Trinidad, Colorado. So I think it's western and more southwestern, if I remember right.
Yeah, it's kind of out there by itself a little bit.
Yeah. Well, there's a bunch of those little markets out there in the Midwest and Colorado. I remember, I think the last one we had in Colorado, Mike, was La Junta, which was more eastern and southern. Yeah. And that was like 2017. It was a long time ago.
Since I've been with you guys, we haven't won one in Colorado.
No, it's the first one. Yeah. It's 2017 that I can remember.
Yeah. I mean, it's a state that's just been blowing up the last 5+ years with probably even longer with people moving there.
Big time. Now, Colorado or Denver, Colorado was starting to get hit, and they've been for the past year. So that's a market we're going to have to kind of keep our eyes on. I am seeing more properties there for sale on auction. So we'll have to keep an eye, but the prices are still high. There's a lot of investors in Denver. So have to keep that in mind. And Pennsylvania, where you guys are, Southeastern, there's just no inventory. When I look on MLS and stuff, there's like nothing.
Oh, there's nothing. There's like 3 homes for sale in Downingtown right now.
Yeah, it's crazy. So if something goes on a market, it's still going to go over ask.
Yep.
Yeah, just going to go crazy. So, I mean, it's good if you get deals in those markets. I guess but the problem is you're going to run into so many other investors competing for the same property that you're going to end up overpaying anyway.
Michael, you and I were kind of watching that one in Abington, Pennsylvania.
Yeah.
I saw the other day that it just sold one at auction for slightly over 300,000.
Holy cow.
And it needed a lot of work.
Yeah, it did. I mean, we were thinking ARV was like 400 to 4 or so.
Yeah.
And it went for over 3.
Yeah,
It's a ton of work.
303. I think I saw it.
And it probably needs 75, 80 grand of work, right?
Yeah, I think I think so. Probably, I think we were thinking 75 to 80 grand. Yeah, right
So that's
around
a
there.
desperate
rehab.
person who wants to occupy it and live in it, right? As a primary residence.
Probably.
It makes sense for them, right? Doesn't make sense for us, but
Maybe a 203K loan or something like that.
Yeah, we're selling. I think we're selling one of our properties to a 203K buyer.
Yeah, Baker.
Yeah, Baker, right? Yeah. That's why those end up getting delayed a lot. Those are at least 45 days to 60-day closings, just because the whole contractor thing. And if the contractor doesn't submit the paperwork properly, it gets delayed to FHA, and it's a nightmare. That's so we're seeing out there. I'm trying to think if there's any other markets that I've recently seen. Oh, one of the articles, and shame I don't have it here. I just saw it yesterday. And I think it might have been on Bigger Pockets or one of these types. It said investors should focus on secondary and tertiary markets. How long have we been talking about that, Mike? Because that's where we live in.
Yep.
Secondary and tertiary markets. And they're finally using the language I use with tertiary. I've been using that term for like 7, 8, 10 years, but
probably 10 years. Yeah.
Yeah.
So if you're on Bigger Pockets, then come over to this site then.
That's exactly right. Yeah. Need to. We talked to some people for Bigger Pockets. I know, Mike, you've communicated with a bunch of those people there.
Yeah, I met people off there. I haven't been there in a while, though.
Yeah. And it's mostly newer investors. Good spot to learn if you want
exactly.
to learn. But,
yeah, I mean, they have a lot of content.
Yeah. Now, one of the things, like, we don't look for it this way, right? But maybe sometimes we'll start to look at it just so we can do like a sample case for students and people out there. A lot of these properties, that we're buying, if we looked at it from a rental perspective, if we did a little bit of renovation, what would your cost then be? Just to do a little analysis. Maybe we could do a little test on that, because what we're buying in that, we need a deeper discount than what somebody who's a buy and hold investor needs, right? They can pay more than we can, knowing what they're going to put into it to just make it rent ready and keep it that way and refinance it. That's actually something maybe we'll have to start to look at a little bit more in certain markets where your taxes and insurance aren't crazy. Where, the property taxes, and if that one in Dallas, outside of Dallas, those taxes are probably going to be high on that property, real estate taxes. But we'll have to see. I think that's all.
Especially some of those Midwest states, by the lakes or something like that you could pick up as a rental. Be a good case.
Yeah, and then, if you're by the lakes too, you might even be able to do Airbnb type stuff.
Oh yeah, for sure. Really increase your profits.
Do different type of stuff. So one of the contractors,
gotta make sure it's not a high dollar HOA.
Yeah, see, that's a key. You don't really want to be in an HOA, and I'm right now avoiding it. I will not buy in any HOA in Florida any longer right now, just because there's too many unknowns. But what if while you're fixing and flipping it, you run into an assessment that they do for $1,000, $3,000, $5,000, $10,000, and all of a sudden eats up your profits, and it can happen. Yeah. We did one, Mike, up in north of Tampa, right?
Yeah.
Newport Richie.
Yeah.
We did one in there. You remember that one, Jake, right? And that was the last one we did an HOA, but that was an affordable HOA. That was pretty inexpensive. So when I say no HOAs, I'm thinking more condos. No. If you find some of these ones where the houses are in and are paying you like $50, $100 a month, that's not so bad, right? You're in more reasonable things. And if you as a homeowner are still responsible for doing the yard or these other things, you're not going to have to worry about those assessments as much, especially single family housing. You're going to be responsible for the roof and all that stuff anyway. So those are a little bit safer.
Some of the HOAs, they might decide that they don't want you to rent it out anymore too. So, I mean, you see that. So you got to watch those as well. Yeah.
If you're buying rentals, don't buy in an HOA. That's for sure. Yeah. Those get dangerous. I guess townhouse HOAs you can do okay in. Again, just long-term rentals is all you're going to be able to do in those. But no short-term. In short-term, you got to have, single detached, no HOA. And even there, like Marco Island here in Florida, the town has put so many, this is ridiculous, but they put so many restrictions in that there's very few Airbnbs that people can rent there. And that's a double-edged sword, right? Maybe it helps for homeowners for noise and annoyance, but it hurts your property values because those people that can do Airbnbs will pay more for the property. So, it's a double-edged sword. So you have to look out for that area too. And different parts of Naples, they'll do the same thing. They'll limit it. But if you're outside of HOA, you're usually in pretty good order. The rates, the mortgage rates are okay. Like I'm seeing 7.25% out there. Like 7.05 is your national average right now. And the Federal Reserve did not decrease or increase interest rates the other day. They kept them flat as we thought they would, but they did say there's going to be at least one rate cut this year, which is good for the market. And the producer price index was actually down a little bit, which is a positive for inflation.
Yep.
But it's probably multi-factored. It's probably because of decreased demand. And maybe these producers have to cut their pricing because there's less demand out there for it. Definitely know we're seeing that in the auto industry. The new car and used car dealers, they're all dropping their numbers because there's less demand. And we have record high auto loan defaults or record high credit card defaults. So that's definitely not a sign of a super strong economy with what we're dealing with there. But the housing's still going up. What are we up 6.4%, Mike, on the year?
Something like that. Yeah.
Nationally. So
yeah.
With high mortgage rates, that is staggeringly high, right? But we hit that affordability. We really hit that, it's so unaffordable for people out there. So we probably, if we drop 1%, go down to lower sixes, upper fives, the affordability will be much higher and we'll have a ton more buyers out there. Look for if rates do that.
Soften the burden of those monthly payments. So the demand would increase.
Yeah. So be ready. If you people see mortgage rates really dropping, be ready to jump in there and do some flips because opportunity will be there. And there's going to be people banging down doors to get properties for a big savings on their monthly payment for sure.
Yeah. Or the people that are just looking to move in general, they might decide to list their place then and go elsewhere because right now you're not going to trade your, 3-4% mortgage for a 7% mortgage,
Yeah. That's hard to do, but there is big pent up demand. There was a couple of different, I guess, not studies, but there's people that want to move that can't because they're locked into that lower rate and they can't move because they're going to be paying so much more for another property.
Yeah.
There is that pent up demand that we see there on the buy side. And again, it'll affect the sell side because if they have a house, they're going to sell their house too, right? So that'll it'll probably be a net wash if you look at it like that way. It's actually going to be a net negative for real estate investors out there because it should still reduce inventory because a lot of these people are renters going in to buy. And rental demand has dropped a little bit. Rental prices, I should say, have dropped a little bit in certain markets, probably where they were overpriced. Definitely seeing that in Cape Coral. The contractor I deal with there, she had 5 properties that were Airbnbs and she couldn't rent them this year. There's just no demand for the rentals and everybody kept cutting their prices so much that she couldn't compete with them. So that's a, big red flag, something to look at there, which is why we're not really sure when to totally jump into Cape Coral. Question is, how close are we to the bottom there? Don't have the answer to that yet. But if rates drop, I think you'll start seeing inventory there reduce a little bit. But it's interesting that Fort Myers, town right below it, has no inventory or very little inventory in comparison to it. But not as much water, not as much with the flood maps, right? The flood insurance is what ate people up in Cape Coral area as much as anything. Flood insurance, and then of course car and auto and all that stuff, or car and homeowners insurance. Yeah, those things really pumped it up. I think that's pretty much all I want to hit on. You guys want to hit on anything else?
No, covered a lot today, I think. So
yeah,
nothing else from me.
Perfect.
I think we're good.
Awesome. All right. Thanks, guys. We'll catch you on the next live stream.
See ya.